The first of London's big banks has reported this morning, and it's been a bit of a disappointment to the markets because the numbers fell year on year. In fact, the third quarter was better than had been expected. Let's take a look at the figures as they came through today. This is HSBC on its third quarter numbers. Pre-tax profit of $3.15 billion. Now that's down 42% from 5.4 billion this last year, but well above the 2.5 billion average of analyst estimates compiled by the bank. Now, the drop is because of the rising credit loss provision and other impairments, but its net interest income surged as banks benefit from rising interest rates. Now, the results included an impairment of $2.4 billion following the reclassification of the bank's retail operations in France to be held for sale. So the net effect of that was we saw the stock down heavily on the session today. In fact, it's the biggest decline we've seen in this stock since the 26th of April this year. And we are very close to closing in on this line of support down here at 442.4. 451 is where we are at the moment. It certainly seems like much of the downside has now been seen by the bank. It was down 3.5% in the Hong Kong markets. It's currently down 4.8% here in London. That line of support at 442 marks a point at which it would then tip down into levels not seen since this time or the back end of last year, December last year. So the market's looking very weak for HSBC, despite the fact it's made a lot of income coming through from this rise in interest rates. Clearly, the rising credit loss provisions are a concern, and this is something that's going to be underscoring the bank's performance in the next quarter as well, as consumers find it harder and harder to keep above the waterline in terms of household expenditure. So HSBC on the way down today, marking the first of the big British banks to report earnings this week.